The morning started like any other for Sarah and Tom. Coffee was brewing, the kids were getting ready for school. The biggest worry on their minds was whether they would hit traffic on the way to work. They had built their life carefully, brick by brick, saving a little here, investing a little there. They had a lovely home, 2 reliable cars, a savings account they were proud of. Their future felt secure, planned, and under their control. They believed they had done everything right to protect their family and their finances. They felt safe, confident, prepared for whatever might come their way. But life has a funny way of reminding us that we are never truly in complete control. That afternoon, the sky turned a menacing shade of gray. The wind began to howl. The rain came down in sheets, harder and faster than anything they had ever seen. A flash flood warning blared from their phones, but it was already too late. Water began to seep under the doors, then pour in through the windows. So, what is this thing called insurance? I want you to stop thinking of it as just another bill you have to pay. That is the wrong way to look at it. Insurance is not an expense. It is a protection. It is a promise. It is a financial shield that you hold up against the unexpected arrows that life will inevitably shoot your way. You are paying a small, manageable amount of money regularly, called a premium, to an insurance company. In return for your payments, the company promises to cover the costs of a large, unexpected, and potentially catastrophic loss. It's a powerful tool for financial security. Think of it like this. You and your entire neighborhood decide to create a safety net. Everyone agrees to put a small amount of money into a big community pot every month. For months, the pot of money just grows and grows. Then one day, a tree falls on your neighbor's roof, causing $20,000 in damage. The money is taken from the community pot to pay for the repairs. Let's talk about the most important insurance of all, because without your health, you have nothing. Health insurance is your absolute #1 priority. I cannot say this strongly enough. It is a contract between you and an insurance company that agrees to pay a portion of your medical costs, routine doctor's visits, prescription drugs, emergency room trips, and major surgeries. You pay a monthly premium to keep your policy active, and in return, the insurer helps cover the bills when you need medical care. The costs of healthcare are astronomical and continue to rise. A simple trip to the emergency room for a broken arm can cost thousands of dollars. Your health insurance policy works by sharing the cost, and an out-of-pocket maximum caps what you pay in a year. Let me tell you about Mark, a healthy 45-year-old man who thought he was invincible. He ran 3 times a week and ate a balanced diet. He had a good health insurance plan through his employer, but saw the premium deducted as a nuisance. One Tuesday, he woke with sharp abdominal pain. The pain worsened all day. He was doubled over and could barely stand. His wife rushed him to the emergency room. Doctors ran tests, including a CT scan. The diagnosis: acute appendicitis. He needed emergency surgery immediately. The surgery was a complete success. He spent 2 nights in the hospital recovering, sent home with pain meds and rest instructions. Weeks later, the bills arrived. The total was staggering, over $40,000. Then he checked the explanation of benefits. The plan had a $2,000 deductible, an 80-20 co-insurance arrangement. Mark paid the first $2,000. Insurance paid 80% of the remaining $38,000, $30,400. Mark owed 20%, $7,600. Total out-of-pocket, $9,600. Still a lot, but manageable versus $40,000. His health insurance didn't just save him money, it saved his financial life. It turned a potential financial disaster into something they could survive and recover from. Every time you get behind the wheel of a car, you are taking on a significant financial risk. You are operating a heavy piece of machinery at high speeds. Accidents happen in the blink of an eye, and the consequences can be financially devastating. This is why auto insurance is not just a good idea. In almost every state, it is the law. You are legally required to have at least a minimum level of liability coverage. Liability coverage protects others from damage you might cause. Collision coverage pays to repair or replace your car if damaged in an accident. Comprehensive covers theft, vandalism, fire, hail, and hitting a deer. For most people, their car is one of their most valuable assets. You must protect that investment. Paying a few $100s for a robust policy is smarter than risking tens of thousands in loss or a lawsuit. Driving without proper insurance is one of the biggest financial mistakes you can make. Protect yourself and others before you start the engine. Let me introduce you to Maria, a young professional who had just bought her first new car. She was careful with her money and knew she needed car insurance. She almost picked the cheapest policy, but decided to pay a little more for better protection. She chose good liability limits, collision coverage, and comprehensive with a $500 deductible. One rainy afternoon, Maria was driving home when the car in front slammed on its brakes. She slid into its rear bumper. Not high speed, but there was significant damage. Her repair estimate, $4,500. The other car, nearly $3,000, plus a rental car for the other driver. The total was heading toward $8,000. She exchanged information and filed a claim. Because she was at fault, liability covered the other driver's repairs and rental. Her collision coverage handled her own repairs. She only paid her $500 deductible. The insurer paid the rest. What could have cost nearly $8,000 cost her only $500. A potential financial disaster became a manageable inconvenience. The power of a proper insurance policy. For the vast majority of people, their home is the single largest and most valuable asset they will ever own. It is more than a building. It is the center of your life. Homeowners insurance is the essential tool that safeguards this investment. It provides a financial safety net against disasters like fire, theft, and storms. A standard policy is a package of coverages. Dwelling coverage pays to repair or rebuild your house. It includes coverage for your personal property, furniture, clothes, electronics, and keepsakes. Home policies also include liability coverage to protect you if someone is injured on your property. For example, a visitor slips on your walkway and breaks a leg. Liability can cover medical bills and legal fees. It is vital to have enough coverage to rebuild at today's construction costs. If your home is uninhabitable during repairs, AL pays for a hotel, a short-term rental, meals, and other incidental costs so your family can maintain some normalcy. Home insurance protects your property, your wealth, and your way of life, not just a house, but your future. Let's return to the story of Sarah and Tom. They stood in shock as the floodwaters ravaged the first floor. The damage was catastrophic. Drywall ruined and floors warped beyond repair. Their furniture and family photos were destroyed. The initial estimate to gut the first floor and rebuild came in at $90,000. This was a sum they simply did not have. It could have crippled them for decades. Tom called their insurance company, voice trembling as he described the damage. The agent walked him through filing a claim and arranged an adjuster visit. The adjuster confirmed the entire first floor was a total loss, but the policy covered the water damage. They would pay their $2,500 deductible. The insurer would cover the rest. The policy covered new drywall, flooring, cabinets, appliances, and personal property replacements. A.L.E. covered a furnished rental so their kids could remain in the same school district and life could continue. Instead of facing a $90,000 bill, they were only responsible for their deductible. Their insurance saved their home, their savings, and their family's future, allowing them to rebuild from a position of strength. Finally, we must talk about the one type of insurance that is not for you, but for the people you love most. That is life insurance, a contract that pays a death benefit to your chosen beneficiaries. If you were to die today, what would happen to your family financially? Could your spouse pay the mortgage, the car payments, and the utility bills on their own? There are two main types, term life and whole life. For most families, term life is simple, effective, and affordable. It replaces your income and ensures your loved ones can continue without a financial catastrophe. The peace of mind it brings is priceless. Insurance transforms a potential catastrophe into a manageable problem, the promise you make to yourself and your loved ones. That foundation lets you build a strong, secure, and happy life.